Ever wondered how startups raise funds? It's a fascinating journey filled with more twists and turns than a roller coaster ride. The world of startup funding is like a vast, unpredictable ocean, with waves of opportunities at every turn. Let's start at the beginning, the idea. It's the spark that ignites the entrepreneurial fire. But to turn that spark into a roaring flame, you need fuel. That fuel is funding. There are several stages to this funding journey. First, there's the bootstrapping phase, where entrepreneurs fund their startup with personal savings or contributions from friends and family. Then comes the crowdfunding stage, where a large number of people contribute small amounts of money. As the startup grows, it might attract the attention of angel investors or venture capitalists. These individuals or firms invest large sums of money in return for equity or a share in the company. Understanding these stages and types of funding is critical for any entrepreneur or investor. But how do these work in the real world? Take Uber, for example, a company that has become synonymous with ride-hailing worldwide. Their journey started small with a seed funding round in 2009. This initial capital, aptly named seed because it helps to grow the business idea into a viable venture, was crucial for Uber's foundation. However, seed funding is just the beginning. Uber then moved on to Series A funding in 2010. This is typically where companies establish a solid business model. And for Uber, it meant expanding their services beyond San Francisco. It wasn't all smooth sailing, though. They faced regulatory hurdles and pushback from taxi unions, which required a solid strategy and a strong team to overcome. After successfully navigating these challenges, Uber went on to secure Series B funding in 2011. This is where companies begin to scale, and Uber was no different. They launched in multiple cities across the US and even started international expansion. But again, this growth came with its set of challenges, from cultural differences in international markets to increased competition. Despite the headwinds, Uber continued to grow, securing Series C, D, and beyond, each time facing new challenges, from legal battles to public relation crises, and overcoming them with strategic decisions and pivots. They built a strong brand, expanded their services to include food delivery, and even ventured into autonomous vehicles. In 2019, Uber took a significant leap forward by going public with an initial public offering, or IPO. This move, though filled with its own set of challenges, allowed Uber to raise more capital, reward early investors, and gain a new level of credibility. Today, Uber stands as a global behemoth operating in over 60 countries and valued at billions of dollars. Their journey from a small startup to a multinational corporation is a testament to the power of strategic funding rounds. Uber's journey offers valuable insights into the world of startup funding. But what about smaller companies? Can they achieve success too? Consider Slack, a company that transformed the world of business communication. Born as a tiny project within a gaming company named Tiny Speck, Slack was a beacon of hope for a team facing the closure of their online game, Glitch. The initial concept was simple, an internal communication tool to streamline their workflow. However, this humble project quickly attracted attention, and investment started to flow. Big names like Axel and Andreessen Horowitz saw potential in this simple yet effective tool, and their funding helped Slack grow from an internal tool to a global phenomenon. Like any startup, Slack had its fair share of challenges. They faced fierce competition and had to constantly innovate to stay ahead. But with strategic planning, they managed to overcome these hurdles and grow exponentially. Today, Slack stands as a testament to the power of good idea, effective execution, and strategic funding. So whether it's a giant like Uber or a smaller player like Slack, the principles of startup funding remain the same. From bootstrapping to billion-dollar IPOs, the startup funding journey is a thrilling ride indeed. It's a path paved with uncertainties, challenges, and victories. A path that companies like Uber and Slack have successfully navigated. We've taken a deep dive into the funding journey of these two tech giants. From their early days of securing seed funding to their eventual initial public offerings, these stories highlight the importance of understanding the funding process for both entrepreneurs and potential investors. Uber, with its multiple funding rounds and eventual public listing, had its fair share of headwinds. Slack, on the other hand, took a different route with a direct listing, providing us with a fascinating contrast. The world of startup funding is as diverse as the companies it fuels, and it's crucial to remember that there's no one-size-fits-all strategy. Remember, Every startup's journey is unique, but with the right knowledge and resources, you too can navigate the exciting world of startup funding.